Hi, I'm David with EV World News. We talk about electric vehicles, green energy, and the stock market. It's Friday, and I've got Adib Khaldi from Simple Picks with me here today. How's it going, Adib?
Good, David. Nice to be back, and thanks for having me again.
Always glad you're here. Well, we had some new information this morning. The U.S. labor market is picking up steam. March payrolls increased at the fastest rate in the past 10 months. The U.S. economy added 303,000 jobs last month, beating expectations of 200,000. That's 50% greater increase than expected, and accelerating from February's 270,000. Unemployment rate also reflected tighter than expected labor conditions, with the figure dropping from 3.9% to 3.8%. That's month over month. Forecasts anticipated an unchanged numbers. Paychecks continue growing, with average hourly earnings going from 0.3% increase from a year ago to 4.1% year over year, which is about what was estimated. Now, the thing is, there's all these things been going on to control inflation. Okay.
Mm-hmm.
And so as wages are going up, that also means there's more money in the market, and we're going to keep having inflation.
Mm-hmm.
And I was looking at something the other day that while they're saying inflation's dropped about 3%, in the past 3 years, my grocery bill has increased by about 57%.
Yeah,
And
I know.
groceries aren't factored in the CPI. So they don't factor in fuel or gasoline, and they don't factor in groceries. And those are the two things that people notice the most. But anyways, let's go
Yeah.
ahead and
So the numbers are falling. Is that right? Based on the recent publications here.
well, here's the thing. There was that talk a couple of weeks ago that maybe there'll be a rate cut
Mm-hmm.
this
Not
summer.
happening. Yeah, not
Well,
happening.
that's what I'm trying to say is if these numbers are still going up, they can't do a rate cut. So
Mm-hmm.
that's just my take on it. I just don't see it, because that's one of the tools that the Federal Reserve has. So, anyways, let's go ahead and let's start. We're going to do the stocks a little bit backwards today. So let's start with AI. So let's start with actual ticker symbol AI this morning or this afternoon. I forgot what time of day it is.
All right. Let's share.
AI is C3. It's the name of the company.
Mm-hmm. Now it's back down to where we had, I believe, announced a long on your show, if you recall.
Yes.
So when I was on your show, might have been a few weeks ago. Actually, no, it would have been about maybe 2 months ago. This was, yeah, it would have been around that Friday, 2 months ago. I recall we made a announcement for potentially going long on this stock anywhere around 25 or $26, I believe. And if you recall, it was one of these two spots right here. I don't know if it was when it pushed here. No, it was this one right here. So this is where, if you recall on your show, everybody can go back for our beautiful audience here. You can take a look on the 23rd of February. We had signaled a long on this chart. Things were looking a little bit tight. And as you can see, it was a definitive buy. Many buyers came in to purchase this stock. It was also leading up to its earnings report, where it did beat. It surprised on its EPS by about 47%. Quite impressive in terms of just, from the reporting standpoint and from where they are from a market perspective. And essentially that yielded, a very generous gain, all the way up from 10%, another 4, another 24. So you're talking nearly a 50% gain, about 40% gain there from the starting point of $25. So great, we got it right, but the play is over once things pop and we get, what we're looking for out of a certain stock. It does seem to sell off or have a little bit of a declining factor in terms of volume. Now, the one good thing about the AI stock that I'll tell you that keeps me a little optimistic, but it's not looking too good in terms of maybe scaling in here, just because it came right back down to where they bought it up from. So this to me tells me that it requires a lot of volume for them to take this stock back up to these levels that we were seeing back in maybe 2023 or maybe as early as 2022 when all these stocks were crazy, early as even 21. I do remember looking at this stock AI back when it was like $70 or $80. So to see it down from that point to, $25, that's a 80% decline or more. It's not, it doesn't paint a very good picture for the buyers that are all up here that had gotten much earlier. And as you can see, the volume really started to pick up on this stock around when capitulation started to happen. That's very normal in the stock market. That's just support, and it happens all the time. We see it with companies. But the one good thing here that I'll mention to you, David, is that despite this breakout happening, yes, if you followed maybe our analysis, you would have made a great buck. But now you're back to the entry point. This is where I'd like to see AI hold and bounce off. So once again, I'm going to, barring that this red line in the sand holds that we drew again in February 26th or 23rd, I don't like to see the stock below $23. So I'm going to write it out in text here for all of our followers. You long idea is to buy at 23 to 26. And we were the previous time we made an announcement on the stock, it was to also buy in these zones. I believe used a different chart for your show. Now I will not switch it now, but next week we can revisit, because I remember I put the call out on this chart here that we had drawn for you.
Okay.
Right. So a second. Yeah, I just don't have my other system here. So yeah, next week we can show just the integrity of where we showed our last call. But if you peek into our last show or where we looked at AI, yeah, it was a buy at around $23 to $25. I remember that weekend. If you bought it on Monday, you would have got it at like $25, and you would have never looked back. So yes, still bullish long term. I think the majority of the stock has capitulated. I think the people who were flipping this stock back in 21, 22, and 23 are out of the way now. And this looks okay in terms of averaging in and buying at this point. And it's also holding again this very line in the sand type of zone that we've just very roughly doodled here. It's still respecting it. So will I buy this stock, David? No, I won't buy this stock today. Will I buy this stock around $23 if I see that it can bounce off of there? Absolutely, 100%. So my first target at buying it at $23 would be at around 27 or 28. And then I think it will, just kind of probably be bottomed out and continue propelling upwards. If it does break this zone here and fails to capture above the buy zone that we had identified, and where a lot of the volume come in when earnings did really well, then I just don't see a lot of hope for this stock staying at above $20. I think it'll trend below $20, and maybe go back and test somewhere like the 16s or even as low as $10. But I don't see that happening right now. I see just a little bit of stagnation, and like I said, this is the zone to buy. If anybody remembers zones to buy that I point out, this is the zone to buy. This is where you want to get in.
Okay.
You might get in as low as 20. You might get in as high as 25, but that's where you want to get in.
Yep. I just want to remind people, if you're watching whatever platform you may be watching on, you can put in the chat if there's a stock you'd like us to review, or you have a comment or a question, and we'll respond since this is live. Why don't we go ahead and let's move to my pet stock, Greenland Tech.
G-Tech, is it?
G-Tech, yeah.
Did he survive?
I know. This one's always kind of funny because it's such a small company.
Yeah.
Oh, God, 214, really?
No, but that's okay. I think last week when I had looked at this stock, I mentioned to you that it needs to hold this $2.10 or $2.15 zone. As of today's closing, it's done that. It is down 7 cents today, which equates to about 3.5%, just give or take. But I think it's like very abysmal volume. When we look at the stock, $39,000 worth of volume today. I mean, meme coins and things that are called like funny
Right.
names are trading for more than $30,000 of volume in a single day. So to see it here is okay. Again, my biggest thing with G Tech is that they're just such a small stock. They're $30 million market cap. If you buy a few $1,000s worth, you're going to affect that stock in just a little bit of a variation in a single day. I'm not going to say in the long grand scheme of things, but if somebody comes in and buys 20 grand worth of stock in one day, like you're going to move that needle. That's half the trading volume of the whole day, essentially. And a lot of these volumes, sometimes it's synthetic. It doesn't really come from the real market. It's just market makers holding your stock down. If they see that there's some variations or some movements on indexes, they'll buy and sell, offload a little bit here and there. But then they'll bring it right back up to, where the majority of the volume is, or what people like to call the VWAP. Now, I don't really look at indicators, as you can see by my chart. I just have a couple of trend lines. But a lot of people use indicators, moving averages, VWAPs, whatever. That's what we would be looking at here. But in terms of green tech, I just want to see it hold this. Like, I don't want to see any kind of drop below the $1.50 mark zone. I think if it goes below $1.50, it's just the uptrend is going to be completely broken. And that's what I'm hoping on here. Again, the chart isn't the greatest chart. It's had its fair times of being played with, in my opinion, by a lot of investors and maybe naked short sellers, like you mentioned to me many times, because they don't have catalysts. And when there's no catalysts, nothing's going to move the needle until you have either revenue that you announce or news that the market can forecast future upon. If they can't forecast it, then there's just no way for you to move the needle without volume. And there's no volume right now. It's abysmal. So G-Tech, it's a back burner play. I like what they're doing. If you're in on the tech and and you're in on the fundamentals and how they're innovating, I would say, again, this is not financial advice, purely my opinion. This is a good spot to buy G-Tech if you believe in their tech and what they have. This is where they'd have to turn around. If they don't, they're going to lose their, all the work that, as you had told me, the CEO did to kind of propel this up. So
What's kind of interesting is there was some news, that ship hit the bridge in Baltimore Harbor, and they had to do a press release saying it's not affecting any of their revenues because they did a recent big sale of electric heavy equipment to the port of Baltimore. And so it just it was just a weird situation for it to be where it ended up. So
now,
anyways,
yeah.
Let's move on to our next stock. Let's go on to ISRG.
Okay, ISRG. Last week we were bullish on
Sounds
ISRG.
like rocket surgery, right? ISRG.
Yeah, ISRG. I think, when did we talk about this last week on your show? Would have been around this mark here. So nothing really has changed. I'll be honest with you. I did say that if I was to buy this stock, I'd like to come in just at around, again, I don't have the chart that I was using on your last show, so bear with me. Like next week, it'll be back to the same one.
Okay.
But I would say that I'd look to buy ISRG like on a bullish scenario anywhere above like $370. I think this is a very great zone. In terms of volume distribution here, it's decently healthy. I mean, on days of sell-offs, we're seeing increasing volume and selling. But in this particular segment here in October, we saw that follow suit, but the stock didn't dump. So what did they do the next day? It started gapping up. And that's where the uptrend started. To me, that this point here signifies the change in price structure and action right here. And like I said, I read this by just looking at the volume and seeing how the selling volume here was moving the stock. the selling volume here was moving the stock. The selling volume here didn't do nothing to this stock. It just moved it down, back up. So when you see this, you know that bears have capitulated in a way. They're dry. They don't have any more ability to take it lower. And that's when you can see, look, green candle, green candle, green candle. You're not really seeing major sells anymore. Why? Because the trend is now in a bullish state. So am I seeing that even here? Look, when we have increasing declining volume, it's just being bought up. So I think the trend continues. I don't think we drop. And yeah, ISRG, I would, I would nibble around like 370 if I got the chance. It's just too high for me to buy and too overextended here. I'm just, I wait for things to come back down to earth. I would even wait as low as like 340 or 350 just on my fibs here. I'm just using basic Fibonacci retracement, guys. Like, this is not rocket science. I use like one indicator in my whole chart. I don't have anything else. So it's just, you don't want to get in when you're seeing that it's near all-time highs. It's just not a wise time to buy. If you're a person that's trading or you're not like long-term investing, you don't want to buy something when it's the highest and you're looking at it and it's the highest. Just not a good risk reward ratio. So that's my 2 cents. ISRG bullish. I'm not going to say it's bearish. I'm not going to say it's going to come down. I just wouldn't buy it here personally. I'd wait till 350, maybe 370. I'll start my position. But overall, this is a great investment. I've noted that, again, not financial advice, my opinion only. I believe this investment is future driven, and because of robotics and surgery and that advancement just being so new, it's going to continue trickling more money in. And $137 billion is nothing. It's a drop in the bucket when you were talking about the world of AI. And AI is actually expected to add, I believe, like $5 trillion in additional value or something along those numbers, or $15 trillion, I think, in the next like 10 years or less. I don't know the full figure, but it's in trillions of dollars. So you don't want to bet against that. That's the future. You don't want to bet against it. So yeah, I mean, I wouldn't short this stock. I would just build a position here and buy it for the long term.
Okay, let's look at NVIDIA.
Well, NVIDIA, my predictions have come true on this. If you recall, I had told you that I would short $950 on your show. This was, you asked me multiple times when we started covering NVIDIA, either start of March or the end of the end of February. And that the top is proven true. And I didn't want to even say it on the live show that I'm like against NVIDIA. No, I think they're super innovative. They're $2 trillion company. They're market leader. There's nothing bad to say about NVIDIA, but when something, again, if you tune into our last show and just listen to the context, when something is up like, 400% in a matter of few months, back in September, no, this is the start of the run here. November of this year, this is when NVIDIA went on its tear. It's up a lot in this last 2 years, and it needs to cool down. Now, that doesn't mean that it's going to not continue capturing innovation, revenue, more earnings, and always beat the earnings. They seem to always beat their earnings because of the increasing usage of microchips in the world, and as well as computer, technologies. But again, that doesn't matter to me. We're watching the chart and we're looking at who's buying and who's selling. And I'll tell you, the trend is bearish. I remember I had given a call that if somebody was to do anything in NVIDIA, they would look at the 920, anywhere between 900, but I was looking at around 920 to 950 put option. And that's proven true. If you did that, you made money. You continue to make money. You're not losing a penny. Did I take it? No, I don't want to short the largest stock in the world. It's just suicide. You can isolate stocks that don't have catalysts to short, but when you're shorting a $2 trillion company and it adds 10% in one day, which is not too much for it, it's only about $200 billion. Okay, you don't want to short that, guys. Okay, why would you ever get your face ripped off? It just doesn't make sense. So yeah, would I short NVIDIA? Yeah, I mean, I stick by my bias. You asked me where it's going to go. I said down. I still think it's going to go down. I remember on your show, I said that it will nest, just around the $700 mark. And that was actually before its earnings. You asked me where it was when it was its earnings, and I remember that it was around 750. I also told you that I'll nest it around 650. It happened. Look at that. That was actually what we did on your show. You had me on here. Where did you have me? You had me on here Friday, and that was the 9th of February. It was around 750. I remember earnings were coming up. I told you, David, it's going to go down. It did. That happened. That means this trend line that I have here is now valid as a top trend line. Then it exceeded our expectations after earnings, went above my trend line, meaning now here for me, my chart says, well, don't go against this. You're suiciding. But that was a fake out. The market again tried it, rejected here again. Where are we today? Where can I see myself coming up? Okay, maybe it'll touch $1,000, but it should come back down. If I see an impulse move up, that's just unpredictable, unprecedented. And again, if you short too heavily at this point when a stock is near all-time highs, you're bound to have a lot of volatility. So it's just not with certainty, but our predictions so far have been pretty on point for the video.
That's great. That's great. Thanks, Adib. Let's look at SMCI. It's probably going to be pretty much a mirror of this.
I think it'll settle, like I said, around $700. So anybody who's looking to short, find yourself here at the early start of the Fib movement up to the uptrend. You're going to see it around $700.
Great, great. And we're going to move on to SMCI. If anybody watching, just post in the chat. And if there's a stock symbol you'd like us to review, or if you have any questions, please feel free to join the conversation. All right.
SMCI, where we at? Again, following suit. Last week we said it's a short. If you shorted $1,000, or I think I said 1,100 was the short. Again, anybody who wants to fact check me, please go watch our videos. It was just on a different chart. We said 1,100 was the short, and you didn't lose any money. So again, my opinion, where do I see the stock going? I think I had something like this going on. I can't remember what I had drew, but it might have been something around like this. And this was the downtrend here. And when we were on your show, it was right there. It was at 1,100. It was maybe on the Friday. So it was around, I'm very uncertain here. It was around right here, last Friday, the Friday before that maybe. And we had given the call out at about 1,100 or whatever that zone was as a short call. As you can see, that's followed suit. Where do I see it going again? Probably down. It may influx back up here to just to make sure that it really needs to get rejected at around 1,100. But other than that, I don't know. I would probably be more willing to short this stock than to buy it. Again, for the sheer purpose that it is up like 500% in 1 year, more. It's like 800% in 1 year. Okay, so hey buddy. So that's just, it's too frothy for me, and with the impeding risks of the FOMC and the markets this year, especially where the interest rate cuts are not certain, and the Fed now is poising in like a 97% chance of not cutting the rates in May, I believe. That doesn't give us any hope that things are going to get cheaper, or they should keep going higher. At least for the time being. So, the phrase, I might have said it before, they used to tell you sell in May and go away. That's probably what's going to happen in the market. It's a historic event. Most time the volume slows down in the summer. Everybody goes on vacations and, out of the countries, and less trading, etc. So, less volume equals less price action, and less price action means potentially less buyers, more bears. And that's where I see SMCI going. I think it'll probably settle back down to earth around $600 or $700 mark. I can't find myself ever buying this stock, just given how high it is. Stellar performance, absolutely stellar performance. I just can't buy it where it's at. I would be a short on this stock.
Okay, that's great. That's great. Let's go ahead and let's move on to an EV stock. Let's move on to Lucid. LCID.
Yeah, I think I seen Lucid earlier today or the day before. It was just sitting where it's at.
I don't know if it really had much
Disappointment
news
from
lately.
Lucid. Uh, let's look at the week. Yeah, I mean last week it got up as high as 335, but by the time you and I did our show, it was at 275.
Right,
And this week it did not get up above 290, and it looks like it's bottoming out to me, David. Again, I've been very vocal about Lucid and it not really being a trade, more so being an investment to build into. But nonetheless, I did announce on like a call that we did maybe 3 weeks ago or something, or a month ago, that leading into the summertime, I do think the EVs are going to get a little bit of a bump. So will I still stick by my prediction? Absolutely. And I think that sometime around May or end of May, Lucid should be trending higher around the $4 mark. That's just my own opinion. I will give a disclaimer. I started a long position in Lucid, but it's an equity position and it's on my long-term portfolio. That's just my own opinion. You can do what you like with that information, and that's just again based on really coming on your show and looking at. And a lot of the times I don't have time to look at a lot of these stocks, so I came on your
right.
show. I looked at Lucid, did my research, did my due diligence, looked at the fundamentals. Without maybe talking about a lot of stuff on air, but looked at the charts here, and the charts to me look okay. Again, this is a major point of the lowest it's ever been. So how much lower do you go? And where does shareholder value begin to decimate? And at right now, we're at 6 billion market cap. I think that's a fairly like normal, decent market cap for a lot of these EVs that are in the A category. I like to consider. So yeah, I mean, am I disappointed this week? Yeah. Is my average low? Yeah. I mean, I started my position at like $2.70. So, do I care where it's at today? No. Will I buy more if it comes down to my buy zone over here? Yes. So we stand to see. I think there might be a little bit of foolery that happens around here in the next week or two. But leading up to this earnings report, which is the 2nd of May, I do believe we're going to be trending higher. They just might really suppress it, and that's the sad part, is that we might not see $4, but maybe on the next earnings report it'll be up to the $4 or $5 mark.
Got it. Got it. Well, it's one of those ones we talk about the the EV industry is a little different. There always seems to be somebody who's a big benefactor behind each of the EV companies. And with LCID, it's the Saudi royals. So there's got to
Yeah,
be the Saudi royal family owns 60% of the stock, and that's all stock that's not in the float. So when you look at that
yeah,
6 billion market cap, I don't even think that reflects the 60% the Saudis own. So
correct.
anyways, let's move on to Rivian. And
All right.
what's interesting is Rivian has had what I would consider to be good news the last couple of weeks, but it hasn't really. It helped the stock there for a day when it surged up to like $12, but then it dropped back down here to $10.
It's down to its line in the sand. And I mean, that's why I see that there's a lot of risk in the, obviously not just the EV market right now, but just in generally the stock market in a whole. Again, I'll touch base on that. I know we're going to probably get to it at the end of the show. So, again, this is still my line in the sand here. Even my Fibonacci retracements are showing the same line in the sand. I would be buying Rivian here. Uh, it doesn't look the greatest on a weekly chart. This news here definitely killed it. Do we remember what this was in early February? It was did they discontinue something? Is that why they dumped, or
No, it wasn't. Oh,
was
they
it
had
earnings?
yeah,
Or
I
it
think
was
they had a
earnings.
bad earnings.
Failed earnings. Yeah, it was a failed earnings. Not failed. It wasn't failed, but they didn't. They reported higher revenue than they estimated, right? But their earnings actually were just lower, and then unfortunately, that does that to stocks. But like, it is it is seasonal. Again, guys, I think this is just the whole sound May and go away. EV stocks might have gotten that hit before because rotations occur. So what may happen now is that the big rotators will come back into the EV stocks, kind of propel them back up to these zones here again, and then you're going to see the other stocks kind of take a hit. And that's just how the cyclicality of the market works. So uh, yeah, am I gonna keep my money where my mouth is, David? I haven't touched this stock, but I would long it at $10. I think that's the line in the sand. I'm gonna watch it for another week just to confirm. I'd like to see it just kind of cement its way above $11 with an uptrend before I buy it here for its earnings, because I think they're gonna run up towards their earnings. And honestly, like by my signals, this would be kind of like a buy here. But I'm a little cautious just because of the downtrend in the EV world. So I will not get faked out, and I'm gonna remain sidelined until next week before I can kind of maybe give you like a play on this.
When Bill and I talk about stuff on here, we've been bugging. We want to put bugs in the ears of some of the big auto manufacturers and Apple. We have different companies that we think should acquire each of these other companies. Like I think Ford should buy Rivian. Rivian looks like a Ford brand, and
Yes, it
because
does.
to be honest, they look like a cross between the Broncos and the Range Rovers, and
Mm-hmm.
it just seems like it would fit in well, and they could use a little bit of a boost, and I think they'd fit well in that family. I think we're
Agreed.
going to, over the next 5 years, we're going to see a lot of consolidation in the EV space. And so I think that some of that makes sense. We had a request to review STI, which is a battery manufacturer.
Mm-hmm.
They're on the NASDAQ, STI,
Uh,
Solidian Technology.
they're very new stock.
Oh, are they?
Yeah. Well, what did they IPO at? Yeah, they just came out. This is this stock listed on the 29th of January. Do you know what they IPO'd at? Let's take a look.
Hmm.
Like it's up 400% in a month, which means it's done pretty well. But it crashed from $6 or $8 of whatever API IPO'd in, all the way down to 50 cents. And I mean, this is a tactic sometimes. If like you're dealing with a certain investment bank or the way that you got listed, or I don't know, depends on how the underwriting process was with this stock. The other thing that I would look at is like any warrants or any things that these investment banks hold or major investors hold. So it's a little tough for me to like look at brand new stocks. I like to stay away from like small stocks, to be honest with you. But it looks great. Fantastic uptrend, great buying. They had their big moment right here where they got bought up from 80 cents all the way to $3. And that kind of cemented their dollar uptrend. And then it got bought up to 360. So it's doing the same thing over and over again. It seems like this thing has a lot of buyers. I don't know if I would short it. I don't think I would short it, but I just don't have enough data to be able to go by. I mean, I only have like a month of data, less than 2 weeks, and we're looking at like hourly candles. So then, we can more isolate these candles into like 15-minute candles or 30-minute candles. But the general overall consensus for this stock, if anybody's just looking for my opinion, I would buy near the zones of a lot of action. As you can see here, this is where all the action is occurring. So I would be more interested in buying this stock around here, where I can see there's some uptrend starting, and then also again around here where a gap up occurred. So essentially, if you are bullish on STI, let's hope nobody gets an STI. You would buy it at $2.50.
Yeah, I don't know if I'd want that to be my ticker symbol.
Right. So yeah, I think this thing is probably going to come down to earth just a little bit because it's up a lot in the last couple of weeks. But it would be a great buy zone at $2, and it would be a decent starting buy zone at $2.50. They do battery energy storage products. I
So
mean, yeah, that's excellent. It's excellent.
yeah, so they make batteries specific. Seems like they have a focus on EV TOLs. And so they're in the electric aviation space. So that's
Mm-hmm.
probably part of them.
I just want to see like what they're like. I'm sure I can read their papers and everything. I just want to see, what they got underwritten on, and it's like, the reason they're flying also, David, is because, um, they have very little debt as opposed to their assets, right?
Yeah, they
And
had
what's
some
their
type of
asset? It's
almost
probably cash. Let me just check.
they had almost a $4 million private placement about 3 weeks ago.
Hmm.
So that
So
probably had
they
some
have
kind of
long term
catalyst on
investments.
them.
What's their other investments? I don't know what the other investments mean. So I don't know what their assets are. Maybe it's inventory, maybe it's real estate with factories or manufacturing, or I don't know. But I'd have to look into them. But from a debt perspective, like a debt PE perspective, I mean, you have $40 million in assets and $8 million in debt. You're running at a 20% LTV there, or sorry, debt to value ratio. Let's say, you're okay. You have room to be able to operate and innovate. And it being a new company, is great. It just means that things are right. I just don't know. I don't understand this mechanism here. This whole sell you, debut you, IPO you at $8 and then dump you all the way down to 50 cents. I don't know why they did this. So I'd have to dig more for me to know like if this is a sound investment. But from the balance sheet and from the financials and from just the chart alone, you want to get in between these two zones right here. You don't really want to be buying here where a lot of short sellers initiated, as well as on the first day, all the people sold right there. So you want to just be careful around this zone, in my opinion.
All right. All right. Let's move on to our next stock. Let me see here. Let's go ahead and go to Tesla.
Yeah, Tesla. Well, we got Tesla a couple of times with some awesome call outs,
It's
and we were able
struggling
to
right now.
capitalize on Tesla. As of right now, I'm looking to start a long position in Tesla. To be honest with you, I don't know. My computer's crapping here. Give me a second. So I'm actually looking to start a long position in Tesla. Oh, look at that. Post market up 5%. Oh my God. Oh my God. Yeah, there you go. I mean, that's the answer right there for you. I don't have to say anything.
It's
I don't
interesting.
have to say anything. I was just about to tell you I would start a long position in Tesla, and I was eyeing it today, but I just didn't do it. And I mean, you can even look at my Discord. You think you follow my Discord? I sent a message to my followers and I said, guys, Tesla looks good, but I just don't want to catch a knife with the market. And look at it; it's up 5% after market. Man, oh man. So this is how some opportunities are missed. But it looks like we got Tesla right. So I don't need to say anymore. Tesla's bullish. This is probably the bottom on Tesla. I really, really like the stock here personally, just from trading perspective. Capitulation, not capitulation, but major selling has occurred here, and it barely knocked the stock down. Yeah, I mean it's down 6% for the week, but it was also up like 12% last week. So it's just about net even for the last few weeks since I started covering it. But on your show, David, when I first covered, like just I think it was the 11th of March, you had me on there, or the 9th of March, or sorry, they would have been the 8th. Uh, I did announce that I took a long position in Tesla, and it went all the way up to $185. So we banked on call options on that one. We did very, very well.
Right.
I came back and I saw that Tesla was again, I believe low. It was like $170. We bought it again and we wrote it up to 180 again. So two times now I've rinsed and repeated it. I like it. It's fantastic. This is a great buy zone. I identified it on my other chart, which again, you guys are not looking at here, but if you go to our shows from last week, you will see that I had a zone and I said that's the buy zone. And if you bought in the buy zone, and I know exactly where I would have done it, would have been like, shoopsies, would have been right here, oh, right here. Oh boy. you would have been golden. And the reason I didn't re-enter Tesla today was because I just have a fear of the market, kind of crapping itself and taking all the other stocks with it. So that's what I kind of stayed away from. I didn't like this breach here today that it went to as low as 160. But yeah, it's been saved. I think tomorrow or on Monday, it's going to probably gap up to not to the $200 range, but it's going to start trending higher. That's just my personal opinion. I think we'll go up to 185 at a first zone and then trickle there until earnings and go higher. And I think earnings is also coinciding with all the other EVs. That's April 24th. So that's even closer. So I think it'll trend higher until April 24th, probably like 190 or 200. That's my line in the sand right there, 204. Anything above 204 is very, very bullish for Tesla. Below, you just want to trade it. You don't really want to invest in it long term. But that's a trader's mentality, guys. Like some stuff I'll hold long-term positions in, some stuff I won't. And everybody has to do what their niche is, obviously, and what makes you money based on what your criteria is.
Okay. So let's see. So let's discuss my suggested stock from last week. And so I brought up a stock last week because I thought it was similar to SMCI and Nvidia, and that's Dell. This is one that's ended up being a little funny. Oh God. There's like I was looking for some advice, and this is a tough one. Oh, we're getting some feedback. I don't know if that's me or you.
All right. Let us go ahead and look at Dell. And hey, we caught Dell on your show. Guys, it pays to get on your show and listen to us, okay? That's all I'm going to say. It's opinions. Everybody's always his opinions.
Right.
But if you guys have stuff that you want to see perform or you want to know where they're going to go, well, you just ask us what David asked me last week. And he said, hey, where do you see Dell going? And Dell was at $112. And I told David, you guys can, I'm not going to repeat it. You guys can go back and watch our shows. We'd appreciate the views. Okay, thank you. But I'll tell you one thing. I seen that the culture on Dell is a gap up culture here every time that it ever made a strong move. So as I told you, when I seen that it gapped up back in September of 2023, that gap wasn't filled, meaning it showed strength. We continued higher. Well, what did I say when we were on the show? It gapped up, and you asked me, and I told you, look, David, it came as low as 105. It didn't fill, meaning this has strength just like that time over here. Literally the same pattern, guys. Trading stocks isn't that difficult. And maybe it is, but you just have to learn the cues. And, as it held this gap here, it didn't fill, meaning the uptrend is really strong. I said, David, I would probably buy the stock at $110, $112. It's going to uptrend. Where are we today? I mean, the week it did, what did it do this week? Did 17% gain this week. So, and it's even up in the after hours. So, I mean, look, we may not initiate positions on every stock. We may not do things because, guys, a lot of the times when we do make a call out, sometimes it's reputational because people will follow it that are maybe like listeners of the shows or whatever tuning in. And if it doesn't work out in their favor, it gives sometimes a little bit of backfire. Of course, it's your own opinion, your own due diligence, you're the one who clicks the button. Nobody else clicks the button for you. But your job is to stay informed. And the more you tune into these kind of shows and the more that you become informed about the stock market and kind of maybe the opinions of other people, like look at us like Weather Channel, and we're just giving our opinions as like we're looking at the weather and we're reading it for you. Doesn't mean it's going to always happen. But if we're going to say, we see chances of rain and cloud, you don't want to go to the beach. Okay. So that's really all that it is. And Dell looks good, man. I mean, there's nothing I could say. I think this is probably, I wouldn't buy it here anymore. This is it. For me, this is the move. Like had I bought it at 112 or 10, I would be out. You know what I mean? So do you want me to predict it, where I see going forward? Well, we got to go on a shorter time frame. And it's also, it's already made its move. It's cemented its move. For me, this is just too late, but Dell looks good. I mean, I'm not gonna even say it's downtrending. It's gonna I think go higher, but my play is over. I have to kind of look more at a longer time frame, and right now it's very overextended, very far away from its middle, what we said, VWAP trading points. So what do you do right now? You just watch, because as I said earlier, you don't want to buy a stock at its all-time highs. Nothing. You don't want to buy anything at its all-time highs. So it's just a rule of thumb. And when that's happened now, your chances are gone unless you're willing to invest in the stock for longer term. In the case that it dumps, you don't have to sell it at a loss in a very short period of time. So that's my take on Dell. It's all-time highs. I can't really tell much more on it.
Okay. All right. Well, it's been an interesting one because it seems so similar, because they do more in server sales than SMCI, and it just seems like they should be able to capitalize on
It's
that
just the
market.
industries. They have different verticals a little bit, and sometimes that causes different, like, again, rotations in the market. But yeah, man.
So let's look at just the overall market a little bit. Let's look at SPY.
Sure. S&P 500.
Yeah. So unless I get
Absolutely.
some requests from the chat, this will be our last one for the day.
Well, look, guys, if you follow me on my public socials or Twitter or anywheres, I have some Discords, some frees. We made a call out yesterday. Actually, we made a call out 2 days ago, and we said that the market looks like a short at $523 on the S&P 500, so 5,230, and that it's going to get there in a day. And that was actually on the 3rd of April. It was at 517 on a close. It opened up, it hit the 523 mark. We went short, guys. So what we did, if you want to ever look, we bought yesterday now it's done, the play's over. We bought yesterday the S&P. It was, I believe, the 14th of April or 12th of April. Let me just confirm. It would be the 12th of April. That's the one we bought. SPY 412, 515 put. And we just said, hey, there's about 8 days till expiry. And it seems like the market's coming onto a point of, again, resistance. It looks very similar to like the NVIDIA chart. But the reason I say this is because NVIDIA is $2.2 trillion. And when NVIDIA moves, it affects the indexes in the S&P and the larger grand scheme of things. So a lot of these bigger charts with the FANGs, the big companies that are the conglomerates, look alike. Anyhow, what proceeded to happen? An absolute monster dump. I mean, the Fed was speaking yesterday. They signaled weakness in terms of not cutting the rates, and we caught this monster dump down almost 1,000 points on the S&P, which I thought was pretty neat. I mean, made everybody that followed like 500-600%. Anyhow, where are we today? Well, the market kind of did a jerk reaction back up just so that no kind of immediate panic in the market. But as you can see,
Right.
it wicked up to 520 and it got connected. So where would I look to short this market going forward? I would look to short back at $523. I believe it will come back up there. Now, if it doesn't come back up there, you'd want to start building your short positions below 520. And what could really happen, and again, this is just my opinion, the S&P could really just shoot up all the way to $530. It can just break all the bears. It can just make everybody a believer. And that's what the stock market does best. It makes you believe that there's no way it's going to go down. And then guess what happens? It crashes, and you lose a lot of money. So this is the greatest trick that, the US market has been able to always pull, is that at certain points, it destroys all the bears. It makes everybody literally capitulate to one side, and then it switches directions. And right now we're at all-time highs, 5,200 on the S&P, 5,300 on the S&P. I mean, beyond my wildest dreams, looking at where the economies are, where interest rates are, where the US dollar is, where the impeding world political like risk of war is. I mean, it doesn't make sense, but it seems like it's still going higher. So where do we see this going? I'm a short in this particular scenario on the S&P. I'm not a bear. I'm not like a doomer. I don't like, I don't think everything's going to go to hell. But I do think that S&P is now a short. And if it does go to 530, I would probably double down on my short if I'm shorting the stock. So, I catch opportunities myself. I caught 1,000 points. For me, that made up my whole trying to short it on, taking my time with it. Well, I did all that in 1 day or 2 days. It was excellent. And now we move on to the next opportunity. My next opportunity is looking to potentially catch more shorts on the market anywhere between, I'll write it down here. So short market between 520 to 530. And again, guys, this is my personal opinion. Only take it with a grain of salt. And if you like it, if you've been tuning into our shows, I believe I started working, on predicting here for the live audiences, probably back in December for David, or November, December, and we've
Correct.
been right majority of the time. And I mean, you can correct me if I'm wrong, but it's been close to on point majority of the time. I haven't really been very much surprised. I've been a little disappointed in some EVs like, Lucid and Rivian that we cover, that we're not able to see them catch bids in areas that like they're almost all-time lows. But other than that, I mean, most of the call-outs, you wouldn't have been.
But even on Lucid and Rivian, you did option plays and you exited those option plays before they cratered.
Absolutely. On Lucid, we did 300%. On Rivian, we did like 200%. On Tesla, we did like 700% collectively. I mean, like that's 2-3 times playing the stock. And when I say these astronomical numbers, these are options, guys. We buy certain option plays that are 1 week out, 2 weeks out, or 3 weeks out, and we take advantage of the big moves. And when the stock moves 5 or 10% in your favor, the options are going to go up 200% and 300%. It's just how it is. It's how the Greeks are. We've been very much on point for the majority of everything, to the most recent one, like Dell last week. It was signaled as a bullish call. Look what happened, up 17% on the stock. The stock market now, we're signaling it's a short. Well, yesterday we got a monster short. Today, I'm not going to come back and give those profits back. So I'm going to say, well, I'm looking to nibble in this zone. This is where I see weakness in the U.S. stock market. But I could very well be wrong, and it can very well continue bulldozing higher. But this is, I mean, it's about damn time. But I'll tell you one last thing here just to end, David. On our public free channel, again, everything is free that you can follow us in. We did actually call this bottom here, and we went long at $414 on the S&P. If you notice, I mean, wow, it exceeded any of our expectations. I'll be honest with you. We sold at like 430. So we sold over here, 440, like just around right here. Because it exceeded our expectations. And what did we proceed to do? Well, just take advantage of the rest of the other stocks that we can throughout this rise up. So that's really all I got. I'm not too overly optimistic to throw all my money at the market. Now, if you listen to any of my podcasts a year and a half or 2 years ago, I would have been telling you it's a bubble, but it's a massive bubble that's not going to stop. And you should probably keep throwing your money at the stock market. But times all change. So presidential elections are coming up. Be careful. You don't want to be buying stocks at the all-time highs. That's all I got.
It's good advice. Well, this has been a good show. We keep going a little longer and longer, but that being said, we may have to at some point start doing 50 minutes on a regular basis. So we've gone for 54 minutes today. That's good.
It's our longest show, but definitely pulled in some pretty good audience I can see here, and love to continue putting these shows on and hopefully predicting the markets accurately for everybody.
Folks that are watching, we're glad to have everybody watching. It's also helpful if you've got stocks you'd like us to review and give an opinion. Please post them. We're more than happy to leave some commentary on them. And otherwise, we're going to go ahead and cut the show. Wish everybody a good weekend, and we'll see